Welcome back to the Tuesday Target Audio Companion. I'm here with my co-host, and today we are unpacking Yuri's latest letter, which has one of the cheekiest titles of the year so far.
The crash that already happened. And honestly, when I first read it, I had to sit with it for a second. Because Yuri's whole point is that everyone is sitting in the bunker waiting for the apocalypse, while the apocalypse has already been quietly clocking in for weeks.
Right, and the numbers back him up. Mag7 multiples have been hacked from 31 times down to 24 times since January. U.S. tech now trades cheaper than European tech on a growth-adjusted basis. He says in the letter, and I love this line, something I never thought I would type in this lifetime.
That line made me laugh out loud because if you have been in markets for any length of time, you know how absurd that sentence is. European tech being more expensive than American tech, that is the financial equivalent of finding out your grandma can dunk a basketball.
Exactly. And here is where Yuri's read gets really clever. Hedge fund exposure to the seven darlings is at a 3-year low. Trend followers are near record shorts. Roughly $240 billion of equity length has been liquidated in a single month. The bears spent all of March preparing for a crash that was already happening underneath them.
And then he layers the war on top, which I think is the master stroke. Because the mainstream view is that Trump is this unpredictable force keeping markets hostage. Yuri flips it. He says Trump has actually moved his final Iran deadline 3 times in 2 weeks. 3 times.
Missile inventories are thin. Escalation dominance has quietly shifted to Tehran. And then he drops this line that I cannot stop thinking about. Approval ratings are sinking faster than a Michael Saylor margin call.
That is peak Yuri. He always finds a way to land a punchline that sticks. And the underlying point is dead serious. The White House has maybe a month to find an exit before gasoline politics eats the entire second term.
So put it all together. The de-rating already happened. The war has a shot clock, and the only thing left to ignite is a squeeze higher when somebody pulls the trigger. Could be Trump. Could be a negotiator. Could be a CTA model flipping long.
And the rest of the letter just keeps stacking the contrarian evidence. There is a fantastic section on cybersecurity where Yuri argues that companies are about to discover that handing your firewall to a hallucinating chatbot is a terrible idea. The names that got crushed on AI replacement fears, Zscaler, CrowdStrike, Palo Alto, are sitting on a massive mispricing.
And speaking of Zscaler, that is this week's Tuesday target trade. He calls it the Supercar play. Stupid in-demand business, stupid cheap stock. The line that got me was, if catching the falling knife wasn't enough, why not try racing it in a bulletproof all-road Ferrari?
That is the Yuri voice in a nutshell. He never just gives you a trade, he gives you a metaphor that makes the trade unforgettable. Then there is the section on retail. Individual traders have abandoned buy the dip. They are panic selling rallies and piling into inverse ETFs. And Yuri's read is that they are unknowingly providing the exact liquidity that institutions need for the next leg up.
Which dovetails into his point about market plumbing. He explains how the JP Morgan quarterly collar trade had over $20 billion of dealer gamma stacked at the 6,475 strike. When dealers are forced to hedge those positions, a single Trump tweet becomes a 100-point sprint higher. The plumbing matters more than the headlines.
And then the macro warning. Jamie Dimon openly talking about structural deficits, financial repression, and stealth inflation. Yuri's point is that policymakers will keep debasing the currency to manage the debt, and investors who refuse to position for that are choosing to be the victim.
The week ahead is loaded. CPI on Friday, with Deutsche Bank forecasting nearly a full % monthly jump due to gasoline. PCE on Thursday, FOMC minutes on Wednesday. And of course, Trump's Iran deadline tonight at 8 p.m. Eastern.
And Yuri's tactical advice is exactly what you would expect from him. Stop trying to trade headlines. Use defined risk call spreads or iron flies. Capture the upside convexity from trapped short sellers. Insulate your capital from the downside. And as he always says, do not guess. Reach out and build the strategy from the option chain up.
The thing I keep coming back to with Yuri's writing is that he refuses to be lazy. Everybody else is shouting about the crash that is coming. He is quietly pointing at the crash that already happened and asking, what if we are all looking the wrong way?
That is the whole point of Tuesday Target. Sharpen your tools, Tune out the noise and find the trades that the herd is too scared to see. Go read the full letter on MacroDozer.com. The Zscaler setup alone is worth the click.
That is it for this week. We will see you next Tuesday.
Trade smart.